Ira Epstein with your financial market wrap-up, and this is for Wednesday. We're at the 12th of February, 2020, just around 4:05 p.m. Central Time. Risk-on day. Man, we've been talking about that. They call it now COVID, I believe it is. Right, COVID, the COVID disease, coronavirus. And as we're looking at the market seems to be thinking the peak in China's behind the market. Now, there's still people catching it in different areas. There was a new case in London. I don't have the new amount of people that died. I'm not tracking it quite the way that I was, because when China said that they're not going to count new cases, if you test positive, and there's more tests now to do it, but you don't have the symptoms, they're not counting it. Well, what does that do against the old numbers? Sort of throws them off. I think I'll watch the death rates more than I will the new cases in China, but you have to watch new provinces, and you have to take this all into account, their new method of counting. But the stock market zoomed. Look at what's going on in the energies. They zoomed. So this market's saying in its own way, with bonds and notes down, you know, let's start getting more normal. And that's what I think is going on right there. When we look at a weekly area chart of closes, you're up for the week now 55 points. It's midweek. Don't know if we'll see some profit taking before the weekend. But the feel of the market isn't like people worrying over the weekend there's going to be a new outbreak and you don't know what you're coming into. I can just tell you how the feel is. And you can see that in the market. If we go back a week ago, you see how you poked up, and this was last Thursday, and then on Friday you didn't know what to expect, and then you came in and the news wasn't so bad, and that's where we're at this point. When you also take a look at what the chart pattern is, you've got higher lows, higher highs. That's the definition of an uptrend. The risk is to not get back under 303.50. 18-day average. That's what I call the line in the sand, and as you can see, it's doing its job on this pullback. That area, certainly, the market was testing that zone, and it went on to make another high. So where's the resistance if all these key averages are below us? It's right above us. It's at this upper Bollinger Band number, and when you hit it last time, you did back off. You locked in right here to it, but that was also accompanied by an embedded reading. Do we have the embedded reading now? We don't. What we have is today, both numbers that make up the slow stochastic are over 80. Yesterday, both numbers were over 80. Tomorrow's the key day. If they both stay over 80 tomorrow, then it's embedded, and you treat the market differently. Right here, it's sort of a wait-and-see game as to, is it going to be able to get up there? Is it going to back off? What's going to happen? In the NASDAQ, you have, now this past tense, now you have the embedded reading. And this market's got the higher lows, higher highs, hits the Bollinger Band, backs away, keeps running to the upside. And this could have a little power here, because if we look at this formation, it went sideways and then it started its move out of there. So that's a little different looking than some of the other charts. The Dow doesn't have that formation. It's just wider, as you can see. It's overbought. I would expect pretty strong resistance, or wherever that first challenge of the upper Bollinger Band is. It looks like it's going to be around the 29,670 level right now if it's hit. Support's back at the 18-day average. If you take out 28,850, you're going to do some damage to that chart. In the Russell, this has been the laggard all the way through, and even just getting here, the market's in overbought territory. It does have higher lows and higher highs, so the trend is up, but it's the weak link of these markets so far. Support back at the 18-day average of closes. In the VIX, trend is down. Now, yesterday I thought the market would actually do a better job of holding if it broke to the 100-day average, that zone. It didn't act all that good. Is this market headed much lower? Well, if it is, I'll stick my neck out and say this already. Wherever this lower Bollinger Band is, I'm expecting the pros are going to write some puts against it, thinking that whatever price it hits down there, maybe they can get back to the closest average, which in this case is the 100-day. In the bond market, you're not doing anything here. Here's what I mean by that. You've got the swing line with lower highs, lower lows. The trend is down. The bias is up because prices are still over the 18-day average of closes, and momentum, which lost its embedded reading all the way over here, if you take a look, that's when it lost it, when it got under. Well, now it's made one run to the 18-day average. It got very close to it. I consider that complete, but it might actually want to kiss it again, so I'd be watching that. If you close under the 18-day average of closes, then the bias is down, momentum down, trend down. 10-year note, same thing. Notice the market held that 18-day average of closes. It's the same pattern. You've got your momentum turning down, but you're staying over that 18-day average. Close under it. Maybe the 100-day average comes into play in the market. Battleground 18-day average. Dollar index. How many days up have we had here? I think you had 1 day down out of the past 7. And the market got under that Bollinger Band, went right back to it today. It's paying attention to it, but it's got the embedded reading. This market's showing so far no sign that it's letting up. When the red line gets under 80, it's time to clear house. That's all. Hasn't done it. You're still in the bull camp, and it's the flip-flop in the euro. This market's in the bear trend. It's probably ahead of itself now that it's under the Bollinger Band again for the first time with an embedded reading. I think hard rallies are going to be sold by the pros. They'll bail, I think, reverse the idea of being so bearish if and when the red line closes over 20 here. In the Japanese yen, are we headed to the lower Bollinger Band? We might be. You're already in oversold territory. Keep that in the back of your mind. Lower highs, lower lows. In the past, the lower Bollinger Band held. The upper one held. I have no reason to believe that pattern's not still at work. Then we get to Bitcoin, and as I've explained, it's almost like the stock market. Bitcoin is going to have less Bitcoins come May 18th. It's that simple. I watched today a stock, MGM, the resort. They fired, I believe it's the chairman, and they announced at the same time they're going to do a massive stock buyback. Stock's up 5–6%. Less stock causes the earnings per share. Not that the company's doing better. You buy those shares back, all of a sudden your numbers look better. It's crazy, but it's true. Higher lows, higher highs, still looking bullish. Now, did we get too cheap? Remember, we were just talking yesterday. There's going to be a number down here that this differential's too cheap. The market today said that if you go back right here to the 349 level, now you're back up already to 438. Nah, that was probably too cheap. We probably tested the low boundary of that because Brent should carry a premium via geopolitics, via all that's going on to WTI crude. Now the question is the market making a statement it got too cheap because demand's coming on? Is it gotten too cheap because of some other reason? We'll find out, but I think the market today said, and very important because of how it closed, I think the market is saying that is the statement. When we get to the Brent, you're going to lose the embedded reading when you reopen tonight. I know you're going to say, he's a magician. How does he know? Because I didn't see any bear news at the end of the day. And the way that the math is going to work on this, it should kick it up. So this is a pretty interesting day. If you lose it, don't be surprised if you get to the 18-day average of closes. If you fail during the day and keep it embedded, that would be a sign that this market's not as friendly as I think it might be in terms of getting beyond the coronavirus. We'll see if you lose the embedded reading tomorrow here. It's still bearish. Until you lose the reading, you haven't lost it. But if you lose it tonight, don't be surprised if you see traders start coming out of their positions thinking maybe the market's going to make a move to that 18-day average. Certainly a pattern where you don't want to be short. And gasoline did it right here. Here was the market still embedded. You lose it. And this is the trade where you have to put a stop back under this low if you're going to trade for it to get back up to the 18-day average, assuming it doesn't re-embed. And at this point, it's not re-embedded. It can't re-embed. So now I'm looking for that 18-day average. It hung, and today it finally hit it. So that's what I see. Now, from this point, what is the trend? Well, we have higher lows, higher highs. The trend is up. I've been telling you to keep your eye on the seasonals in this market. Can it make a move into the seasonal basis where it starts moving even higher towards the 100-day average? It could. You know, you might get a false start here or two, but the trend is up, the bias is up, momentum is up. Nat gas bounced nicely away from the lower Bollinger Band. What I teach, I repeat over and over. The first challenge is where I think pros take money off the table. Now, when I say that, could they put a tight stop? Whatever they want to do, you know. But what's taught me over the years is watching these things and coming up and trying to be consistent in my approach to it. That's what it is. I let you take it wherever you want with your trading. Now you're getting the bounce. I wouldn't be surprised if you run into the 18-day average for resistance. You're oversold, correcting, that could be your resistance number. I certainly have to wait in the morning and see how the BCF report, in other words, billion cube feet, are going to go into storage. Are we going to get draws or not? We're getting the first real winter tonight in Chicago. Outside, the snow is heavy. We're going to go down near freezing again. So for a few days, we're going to get it. That's going to move east, and so we'll see what that does. So a combination working on that. One of the things I do, and I took my phone out of my pocket. I didn't want it to go off in here. This is actually my phone. And what we did is we captured what it looks like for you to show you how big, easy to read it is. If you trade off your phone, it's going to tell you the last volume. Charts. People tell me they can't read charts. I think you can read that chart pretty easily. And you can look at order tickets if you have an account with us. Let's assume you don't. That's fine. You get price alerts still set when the market does something. One of the neatest features we've done that I haven't seen on others is voice control. And yes, you can set up your quotes so that you can say, play my quotes, and it will play your quotes. We've turned that off here. We didn't want you to actually get it as I'm talking, but it will do that. So you can also say, give me my E-mini S&P chart. Bring it right up like that for you. I mean, this is a slick thing, and I had a big hand in working with the people developing it all for you. So you got your quote boards, news. You know, that's the big thing here. News is important. So we come out with the news, and the most popular guy out there is me. And there I am. So when my videos get posted, you're going to get a push alert, not a text. Text you'd have to pay for if I sent it to you. A push, if you have this installed, it alerts you that I've done that. You hit the alert, and it's going to play my video right then and there for you. For those of you that subscribe to my written updates and the like, they're here as well. You could have different looks to your quote pages, different categories, the news stories, special stories that we put out. They're all here for you to look at. How do you get this? We want to give it to you free to try it out. No credit cards. We're not asking for any of that. Give us, go to our website or give us a call. If you go to the website, it's under the free offers. You can click right up here to get there as well. I'm Ira Epstein. You have a good day. I'll see you tomorrow.